Hey guys, welcome to another episode of Stop Loss Investor. My name is Sai, and today we're looking at the total addressable market of Amazon. So in this video, I'm going to go over the different areas and industries that Amazon's involved in, and just to see to what extent is Amazon covering that market and generating a revenue from those markets, and what is the potential revenue that it can generate, and what the future holds for the company. So these are the currently all the addressable markets that Amazon has a foothold on. They have access into these streams. They have built I guess a small business, a small ecosystem around these each of these different markets. So from the top we have public cloud, which is AWS. We have logistics, which is Prime Air. Then we have ride hailing, which can be looked at as being Zoox, which is an AI automotive company. And that's kind of in conjunction with Rivian, which is another electric vehicle company. And then we also have music, which is just Amazon Music. Then we have retail, which is obviously Amazon.com and Amazon Go and Whole Foods. And then we have healthcare, which is a recent initiative from Amazon. That's something they've, I guess, started with by a small company called PillPack that they started. They've acquired that company and they're essentially starting a delivery service in terms of delivering prescription medicine. And they also released a new product recently called Halo, which is more like a fitness band, which you can control with an app that they have. And then they have the video streaming service, which is the Amazon Prime Video and the Amazon Studios, where they make original content. And then we have the Internet of Things, which can be seen as being Alexa, Echo, Amazon Auto, Ring, and amongst other things that they're doing. Then we also have advertising, which can be seen as Amazon Ad Service, which is where Amazon, well, you pay ads to put your products on Amazon websites and subsidiaries. Then we have the Gram streaming service, which can be seen as being Twitch and Amazon Game Studios and Prime Gaming. And then we all obviously have the audiobooks and ebooks, which is covered with Kindle and Audible. So that's various addressable markets that they're currently involved in. They don't have a major hold in any of these markets. Maybe retail. Uh, I would think, yeah, retail and public cloud. Other than that, all the other markets is something that they've just recently started to get into, and we're going to see what the total market size is that Amazon is actually penetrating, and see how big the company can get. So if you look at the current business metrics that Amazon has and see where they generate the revenues, as I said before, most of these markets that they currently have a foothold in, they don't generate that much revenue from it. And if we see here, this is a recent quarterly statement. We can see that there's online stores, physical stores, third-party sellers, subscription services, AWS, and other. And right now, 50% of their revenues are coming from the online stores where they include the digital media content, where they record gross revenues, which includes durable goods that include media products available in both physical and digital format, such as books, music, videos, games, and software. And so the products that they also kind of separate this in the subscription services, where if it's included in the subscription services, it's not included in the online stores. So we can see that they said here, these product sales include digital products sold on a transactional basis, digital product subscriptions that provide unlimited viewing or usage rights are included in the subscription services. So this is essentially like if you bought a game on Amazon, just like any digital game, like for a PS5 or whatever, it'll be included in the online store. But if you use Prime Gaming to buy that particular game, then it will be included in the subscription side of things. So that's basically how they're separating it. So that's good. So it's not there's no real overlap between these revenue segments, and we can see that that's taking up majorly 50% of their revenues or their net sales. And then there's the AWS subscription, third party, physical stores, other, and most of these don't include um, the other things I was talking about in terms of so music, sorry, it does include them, but it's a very small part, like music, video streaming, um, healthcare, like with PillPack, game streaming, audiobooks. These are all covered more or less in the subscription service side of things and in the online store side of things. So they're all overlapping, and but they still have they only generate a small part of the revenues. So they have a big, they don't cover that big of a market as we expect Amazon to cover. And this is I'm gonna go further into this with this Excel sheet that I've created, where I go step by step into each different segment that there is and what's the potential of that segment. So here's the Excel sheet. Go ahead and auto hide that, and we can see that this is just a revenue I've created for the past 3 years that Amazon has generated to kind of get an outlook of understanding of what it can do in the future and see what the trends are in terms of their percentages as to the cost of revenues, the operating expenditures, and the revenue size and growth. And here, this is a main bit. So the total addressable markets that currently Amazon's involved in. So as you can see, each one has a subsidiary of Amazon involved in it, and as soon as over time, it's going to grow to kind of accommodate that market valuation. So on the retail side of things, the retail total addressable market that Amazon has is currently $25 trillion and it's growing every year. And in that space, we have Amazon.com, Whole Foods, and Amazon Go or Fresh as they've branded it. And in the gaming side of things, there's a $165 billion opportunity with Twitch, Prime Gaming, and Amazon Game Studios, where they generate their own content. And then on the video streaming side of things, there's $51 billion, which includes Prime Video, Fire TV, and Amazon Studios, where they create their own content there as well. And on the public cloud side of things, there's AWS. Global advertising includes Amazon Ads. So in this part, we know that currently Amazon Ads is mainly on the Amazon website, but as they grow in the advertising space, I don't think this is something that they're really focused on, but I wanted to put it in there because it's very possible that they could improve it. Because if you look at Kindle, if you look at gaming side of things, if you look at Prime Video and Studios, um, or even music, people can easily buy ads to promote their products, much like how they do it on YouTube or on just any advertising platform like Google, even. Well, I guess YouTube covers Google, um, Facebook. Yeah. So if you think about uh, like the whole the Facebook Marketplace, we can see that that's kind of the ads you buy to promote your products on Facebook Marketplace can be used the same way in Amazon, can be used the same way in Whole Foods, where you put your actual products on the shelves of Whole Foods or Amazon Go. So that has a bigger role to play. I don't think that's something that they're currently thinking about. Like they're doing a lot of different things, so they're trying to go one at a time, but they're in so many different places right now. Um, but going forward from there, we have the US books market. I couldn't really find the total global market, but I could find a US revenue source where there's $26 billion currently in revenues from US book market. And that's covered with Kindle and Audible. In the automotive and logistics side of things, there's Prime Air, that's their delivery service that they include with the Prime vans, which they teamed up with Rivian to deliver that. They also have Scout, and they're recently doing drones, and they have their own cargo and freight. That's all basically on Amazon. That's only Amazon things. But as they're growing, as their revenue grows, as there's more sellers on Amazon, as there's more people kind of, I guess, converging into Amazon, they're gonna have that market as well. And it might not be a big deal at the moment, but I think they can make a bigger role where they can kind of uh, source out these their logistics right now. Right now, they're just trying to actually focus on actually shipping out their own products before they can, I guess, ship the world's products. Um, but yeah, then going from there, there's ride hailing, which they're covering with Zoox and Rivian. This is to come. They haven't. I guess they've rolled out Rivian's electric trucks or electric vans and Zoox AI, but this is in projects. I'm not too sure how uh, Tesla's I guess market cap that I recently saw an interview where I believe someone from ARK Invest was saying that Tesla's market cap could be looking at about $8 trillion valuation. Um, I'm not too sure how they got to that valuation. But if that's anything to say regarding automotive, uh, electric automotives and AI, then we can see that ride hailing can be a big portion of that. Obviously, Tesla has solar and other things involved in there, so we can say that I think comfortably maybe 1 to 2 trillion of that $8 trillion valuation could be from this ride hailing, robo taxi services. Um, but from the research I did, ride hailing has currently a total addressable market of $126 billion, and Amazon kind of has a foot in that market with Zoox and Rivian. And if we look at the global Internet of Things side of things, they have Alexa and Echo, where you can connect the Wi-Fi in your home. You can ask Alexa to play your music, or order something on Amazon, or uh, potentially in your car and other things. So other services where they're all interconnected. So that market has a potential $875 billion, which is a lot actually. Wow. So there's also the global telecom services side of things, which they are getting into by initiating Amazon Sidewalk and Project Cooper. So that Project Cooper and Sidewalk is kind of I guess, a straight competitor to Tesla's Star. Sorry, not Tesla's. Who is it? I think it's SpaceX Starlink, which is run by Elon Musk. So Elon Musk's Starlink, which essentially tries to get internet through satellites and rockets to everywhere. And essentially, this would put AT&T, Verizon, all these other kind of data providers and um, telephone services kind of out of business essentially. And Amazon's getting on that business as well with these two kind of companies that they built up. And on the music streaming side of things, which is a $25 billion market, they have Amazon Music, and then they also have the healthcare side of things, as I said before, where they have that's $11 trillion market there, and they're getting into that with PillPack, Amazon Halo, and Amazon Care. So Amazon Care is Amazon's healthcare service, but it's currently only used by the employees of Amazon. You can kind of think of it as a pilot service. I think they said it's a pilot service to kind of to give to their employees, but I think 3, 5 years from now we can see that being a big part of Amazon's business, or sorry, not maybe not a big part of Amazon's business, but something that's available to consumers. So with that being said, if we look at the total market value and if you just add all of them up, there's a total addressable market of Amazon of roughly $40 trillion. That's a lot. So if we can say comfortably, I mean, 25 trillion of that is from retail, and then which they have a strong foothold in. And so if you can say that Amazon grabs maybe 10% of that $40 trillion market, and that could be from anywhere. It doesn't have to be 10% from each of the revenue sources. It could be anywhere, obviously. And so that's a $4 trillion market cap Amazon would have. And right now they're valued at being $1.52 trillion. So if we look at $4 trillion, $1.52 trillion, that's a 2.67x growth in Amazon that still has room to grow and would only have captured 10% of the market. So that's a big bit there. If Amazon can get 10% anywhere, so if they can get, I think if we look at what COVID has done to the retail sector and what it has done in terms of like the Prime subscriptions that Amazon has with everyone staying home, and if you want to game, you don't particularly go out. Like people are using these services more often, and with Prime Gaming, it kind of offers a holistic approach to Amazon, where you get the music, you get the Kindle services, you get Amazon delivery services, you get Prime Gaming, you get Prime Video. So you get all these extra services on top, which all adds to the Amazon revenue system and kind of gets a share of that billion-dollar market or trillion-dollar markets. So we can assume that over time, Amazon can reach a level where they can get 10% of this market. We're looking at anywhere from 2.67 growth to higher than that as the market grows. So they're very much undervalued at the moment, I would think, even though they're at a $3,000 value per share value right now, and they're generating so much revenue. They're generating roughly $300 billion in revenue. And they seem to be kind of everywhere. They even got an antitrust case from the government. But we can see from this, they don't actually own that much. Like they don't really have that big of a foothold in any market, really. I recently saw a stat that on one of the big sites, like I think Wall Street Journal or maybe Forbes magazine, where they said, oh, sorry, no, it was Statista. And essentially what they said was looking at the stats of Amazon, they were looking at Amazon having only a 5% revenue from US. So they only own 5% of the revenues from US market. So that's not a lot. And this is a total retail market for the whole world. So in the US, I believe it's roughly around $5 trillion of retail. So if we take 10% of that, that's 500 billion, 5% of that, we get this number. So, sorry, 10%, that's 5 trillion. Then, half of that, we get this number, which would 260 billion. That's wrong. Trillion. Sorry, yeah. So they would actually have 1% of the revenues. So yeah, they don't actually get that much of the revenue streams. And so I think they're very much undervalued in terms of their growth prospects. They have a much more room to grow. And if we see go back to the PowerPoint and look at the numbers that they've are generating here, online stores have been growing at roughly, like if we look at it, 37% year-over-year growth here. Physical stores have gone down, which kind of evens out, understandably. The more people buy online, the less they have to buy physical, so it makes sense. Third-party sellers have been growing at 53% year-over-year. Subscription going at 32%, 29% for AWS. Other includes advertising services as well as other service offerings that they do, which is growing at 50% essentially. So they're growing very much still in their growth phase of the company. They're not anywhere near that the behemoth that we think they are, that full market cap valuation that we think they do have. So if you look at it from that perspective and see how the market's kind of valuing it at the moment. So essentially the value of the market is that they're currently valuing so that's a third quarter revenue, 260 billion. I'm just going to make it easier for me for numbers on the go. Just say fourth quarter, they only make $40 billion in revenue, roughly get about $300 billion for the full year 2020. So essentially for 2020, a full year of $300 billion, let's just say, we're getting a market cap of $1.52 trillion. So we're getting a 5x valuation for the revenue. And if that's basically what the market's valuing it at the moment. Obviously individuals can value it at their own pace. Maybe you want it at two times value, maybe you want it at 10, maybe you want it at 0.5 or 1, whatever it is. But the market as a whole is currently valuing Amazon at being 5 times the revenue that it generates. The market cap being. So if we forward that to 2023 and give them a conservative growth rate of 25%, roughly they're going well above that. I'll just pull up the stats from Morningstar. So here I have the stats, and we can see that revenue percentage has growth. 10-year average is at 27%. Latest quarter, they're at 37% year-over-year growth. They're very much growing very fast and at a healthy pace. They've been pretty consistently in the high 20s to basically high to low 20s, and in the latest quarter they're actually high 30s. So they're very much growing fast, very fast. And if we look at it being conservative and just go 3 years from now, or next year and the year after that and the year after that, they grow at 25% each year, we can get to them about $678 billion of valuation. And to make a round, I'm going to make that being 700 billion. So here I have all that laid out. So at $300 billion, the market's valuing it at 1.5 trillion. And if we take that same rationality off the market and just push it out 3 years with that revenue growth, we can see them being at 700 billion, give or take 20 billion, 700 billion. And if we put that same valuation, 5x growth, 5x the valuation, that's a $3.5 trillion market cap. And if we say they stay consistent in terms of the shares they issue to investors, we can see that they can be priced as being $6,876.22, which kind of roughly adds out to being a 2.2 times growth from where it is priced today. Hopefully they would do stock split, like a lot, because no one has that kind of money to just kind of throw at Amazon, bro. That's a lot. Jesus. But yeah, but like just on that basis and just looking at a market valuation and just looking at a rationale of how the market's viewing this, and if anything, these kind of subscription online services that Amazon offers, they're only going to grow more and more. If you believe that COVID has changed anything in terms of the retail space and in terms of the online space, Amazon's going to go bigger and bigger. And right now they're not actually that big. So we can see that Amazon has a subsidiary in each section of these big markets, but in each of them, they don't have that big of a share. They're at 1.52 trillion. That's not a lot. Let me just bring up a calculator to see how much that is. So if we go 40 divided by 1.52, so yeah, so they're like 26 times less. Or to make it easier for myself, 0.52 divided by 40 multiplied by 100. They currently own 3.8%, or they're currently valued at having a market cap of 3.8% of the total addressable market that they can have a foot in. So now, obviously, in terms of these market valuations given by the broader stock market, maybe not many people are looking at this. Maybe they're only looking at the retail space. Maybe they're only looking at the subscription service that they offer in terms of gaming, streaming, and music streaming, and the book side of things, and they go, well, in that case, they're overvalued, right? If you just look at the streaming side of things, if you look at gaming, video, public cloud, US books, and music. If we add all of that up, 165 plus 51 plus 260 plus 26, 25. So if you just look at that, that's $527 billion. Now, if you look at that, then you can say, well, they're overvalued. But then you'll be missing many segments that they have a potential in, such as the retail segment and like the global advertising segment, the logistics side of things, the ride hailing side of things. All these you're going to miss out on. Now, if you look at just the retail side of things, if say Amazon goes, or sorry, Amazon.com is the only thing that matters, then we're looking at 25 trillion. Whoops, 1.52 divided by 5. Even still, even in that case, they only generate 6% from that total market. So they're not as big as people think they are, and they have a lot more room to grow as they're in their early phases in all these different areas. Even they haven't even rolled out the healthcare to the general public. And Sidewalk and Cuba, they've recently got the FCC approval to start doing that in terms of Prime Air and Scout. They recently got, I believe, approval to use the drones that they've built. So that's another thing. They're really the only biggest uh, segment that they have is AWS, and we can see that still growing that at 30% year over year. So that's nowhere near the size of like the maximum size of where it should be. So Amazon's very fairly valued, maybe undervalued at the moment, and I believe it's a company that has a lot more room to grow. And I can see it being a stock that's worth $10,000 in the future, and not too distant future, probably in the next 5 years potentially. They have a lot more room to grow, especially if they keep growing revenues at this rate, which is the average for the past 10 years. And in the latest quarter, they've grown at 37%. So they've exceeded that. And yeah, we have to understand, like, when I valued the company on a net income valuation, essentially what I did here was I looked at their revenues. I looked at their third quarter revenues, essentially did divided by 3. So that divided by 3, multiplied by 4 for the full year, and then added this on top year over year. And then I kept their cost of revenue the same, assumed that they have no operational efficiency, that everything more or less stays the same. So 74%, which gives us a gross profit for the company of $176 billion. Operating expenditure, 93%, stayed the same. No operational efficiency there. Cost of sales, everything else is more or less the same as what it was here in terms of percentages. And we get to a net income of being $37 billion adjusted for tax. And couldn't really be bothered to kind of project how many shares outstanding they would have. I would assume they would be similar to where they are right now. If I go have a look at Morningstar to see how the shares have been looking for the past 10 years or so, it's around 500. Like, yeah, like whatever, it doesn't really matter too much. So yeah, I just went with 509 million. They would have an earnings per share of 73. And if we right now their price to earnings ratio is very high. So I took the consensus, which is consensus forward PE, which is what the market believes going forward that it should be valued at in terms of price to earnings, which is at 56.82. So I thought, oh well, if the market thinks, if Morningstar's market thinks they should be at 56, let's put 56 in, see what happens. And we get to a share price of 4187.94 3 years from now. That could be very possible. This could be very possible, this price. And if they're at 4 trillion in the near future, they could be higher than this, maybe at 7,000. I think 5 to 10 years, they can easily be at $10,000 a share if they keep the share outstanding the same and if they have no stock splits. But if we give it any irrationality as it has, because the market's been very irrational over the past, I guess, essentially for the whole year since COVID hit, they just went all out into these big tech stocks. And if we look at their current PE, I believe they should have it here. 94. Okay, so they're right now at 94 PE ratio. So if I just go, actually there was an easier way to do this, but whatever. I could have just divided this by this. I would have got that. But whatever. I am going to put that in there. So 94. 3 years from now, let's say we have the same rationality as well. They're doubling in growth, which kind of adds up to this. So kind of all checks out. But the main thing that we have to understand in this is Amazon's actually not as big as we think it is. They have a lot more things to places to go, a lot more room to grow, and they more or less have a foothold. This is not just a execution from Jeff Bezos. I'm not expecting him to start. Maybe in the near future he gets into this industry. I'm not saying that. I'm saying they're already there. They just need to monetize it and I guess get bigger, which they will. That's the whole point of getting into that industry. So this is only a matter of time before they actually start growing into these industries like healthcare or telecom or the logistics business and even the ride hailing. So there's many, and obviously all these market caps are going to grow as time goes on, and I believe they have a lot more room to grow and they can be a much bigger company. And with that being said, I just want to say thank you for your time, thank you for listening, and see you in the next video.